Got my technology expert of TFNN beside us here. I'm Mr. Dave White, and I do want to bummer. Mr. Spock died. Well, I know you loved him.
I liked him. Met him a couple times.
Really?
Yeah.
Wow.
He owned almost all the property down there around where they filmed the Tonight Show when Johnny Carson had it out there. When you don't know it, but the guy was an incredible investor. He figured he'd never have any more roles after Spock.
Okay.
But he was in Mission Impossible, a bunch of other stuff.
Yeah.
And he had some decent money. So he went to buying everything he could in property, mostly around the video production area.
Was this out in L.A.?
Yes.
Oh, that's so cool.
And so I would go in and call on people, and they all the buildings were owned. I can't remember the name of his investment company, but he bought up everything down there. He must have owned 75% of Burbank.
That's a great story.
And the last I saw a thing on him, he'd made a lot of money. He was making about $15 million a piece on the Star Trek movies when they came out late in the 70s.
Okay.
He continued to buy everything. He spent all his money back in that. And then he made about 10 or $15 million on doing 3.5 Men. I don't know if you remember that movie.
I know the movie.
He was the director of that movie.
Okay.
He directed a bunch of other ones, and you never really heard much about him.
That's great.
But he was a very good director, made some good movies. But he took all that money, kept pouring it back in. Last I heard, he was worth somewhere around $500 to $750 million, and all of that was taken as movie profits and just buying more and more property in Burbank.
Gotta love it, man. Unreal. This is a quote by Duke Ellington. A believer is an optimist who thinks of tomorrow. Well, Mr. Spock thought of tomorrow.
He was.
Big time. Market-wise, let's take a look at it out here. Dow Industrials finished down 81. NASDAQ off 24. S&P's off 7. Gold contract up $2.60, trading at $1,212 an ounce. Silver flat at $16.62. Platinum up $12 at $1,187 an ounce. Copper $2.71 a pound flat. Light sweet crude up $1.11, $49.27 a barrel. Bonds, the bond market, folks, is phenomenal. Now, what are we doing? The bonds look like they're doing another small ABC structure on the way up. They're going to go after the highs. What you had out here today, you had the 10-year up 5 ticks, 126.14. That's after rejecting the lower price. 30-year up 5 ticks, rejecting lower price at 146.31. And King Dollar just crawled over the high, even on the weekly basis. It was over the high, closed over the high. It was down 36 ticks, closed at 95.30, but that will put it on track to go after the January 26th high of that 95.85 area. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay. So if we start with the SPY, folks, what you're going to see out here is this. The volume, of course, is anemic. And when I say anemic, it's anemic in an extraordinary way. We closed out at, on the weekly, well, on the daily or the weekly, it doesn't matter what you want. Price-wise, it's the same. Of course, it's 210.66. What do we do volume-wise? Well, what you did is this. We did volume of a 385 million, and just so you can get your head wrapped around that a bit, that daily volume, that weekly volume is as much as we had on a day, October 15th on the way down. So what does that mean? Well, what you have is this. It's subtle. The high of last week was 211.33. We closed at 210.66, so on a technical basis, that's a failure at a high, price, volume, all of the above. Now, that being said, what the SPY has to get done is it has to come back inside 208.85 in order to be in the lower range. I suspect we're going to see that make a run for it next week. NDX 100, if you take a look at the 3 Qs, the same setup you have in the SPY, we have in the 3 Qs. Specifically, what you have is this. 3 Qs, higher high, dramatically lighter volume, same type of take also. The 3 Qs out here, what the 3 Qs did on a weekly basis, we did 102 million, and October 15th, they did 112 million on the way down. We closed at 108.40, and the high of last week was the 47. So same setup there. The NDX 100, no doubt, though, has been a stronger indice than the SPYs. They're all at highs, but bottom line is that that NDX 100 has been stronger. Gold. What do we have with the gold market? What you have with gold is this. Gold is a decent setup, folks. What we've done this week is this. We got out of the downtrend. You know, the downtrend that had started happening, that was happening from January 22nd. That's when gold was at 308. Runs all the way back down to the price point of 1197. We tucked our way. We got outside it. But what we don't have is that wide price spread accelerated volume. And that's when you break trends, that's what you do want to see. You know, so it's going to prove itself next week. That's the bottom line. You know, daily, weekly, they're both set up pretty good. XAU, HUI have the same types of setups, meaning they're nice setups, but you want to see the proof, the proof in the pudding. Bonds. What do we have with the bond market? Now, this is the ever-ready bond market. I mean, it's just actually phenomenal. Bonds, you know, just don't want to go down. They broke topside once again on the 24th, and you talk about wide price spread. The 10-year had 2.4 million contracts. It went from 27 to 28 to 25. So that's setting up. That's going to go into the highs again. You know, you had not all the Fed presidents out here today, but you did have Stanley Fischer, who's the vice chairman, and Dudley, who's the New York Fed president, out there at a New York forum today. And both of them were basically saying different things. The vice chairman was saying he sees June as a nice place to, you know, basically maybe get, June or September, get an updraft in rates, where Dudley was saying that until our perception is that we are going to see inflation of 2%, he didn't feel there's any need to get rates up at all.
They've got that can. You know which can I'm talking about?
No.
The one you keep kicking down the road?
Yeah,
it seems like, oh, I'm going to kick it down another 10 feet, and then when I get to it, I'm going to kick it again.
They're scared to death of raising rates. Well, this is what's so bizarre, folks. They're scared to death of raising rates to have the market pull back. It has nothing to do with the rate structure. It has everything to do with what assets are worth on people's on companies and banks' balance sheets.
There was a great, I'm trying to remember who the gentleman it was. I think it was the guy that used to work for PIMCO.
Okay.
And he said basically the Fed has one option, and that is trying to blow all the volatility out of everything and just have it sit still. They can't really have stocks go any higher because it's a bubble. They can't really have them go any lower, or everybody's going to want to sell at once. So as far as he's concerned, the only play that the Fed has is trying to keep the market and all the volatility out of the market and have people just sit there
and
own it. And it does kind of seem like a no-win situation for them. If it does go up and they just act like nothing cares, it goes into a bubble. And then we all know what happens when the music quits playing. The other thing is that it starts pulling back and everybody gets nervous and it causes a recession. So they want this market to go sideways. It's Alarian is the guy that said that.
Alarian,
so
okay.
the only real idea that these guys have is, can they just let the market go sideways until the reality of the market at 2% GDP per year catches up with the market?
Yeah,
and
I can see that. I can see that. You know, bottom line is that they're not going to be able to pull it off, because what you do have, and this is the longer that we stay up at these levels, folks, what you do have is that there was a great quote in the Den. You probably saw it the other day. Headline news: market down 0.1%. I'm exaggerating a little. They might have said 0.2%, but it's a great quote where one of the traders put in there, because it's that dramatic, folks. Meaning that if the market backs down at all, it seems that people freak out right now because they haven't had a correction in so long.
I've always one of the earliest things I heard was that the market was bipolar. Either things are good, getting better, or they're bad, getting worse. And there's not a whole lot of difference between flipping the switch up and down for the mentality. Everybody runs one way, everybody runs the other. And we've been on a manic high for quite a long time.
Well, I'll tell you that one of the smallest pullbacks I've ever seen that people absolutely panicked was in '94. And '94, folks, okay, it was a decent pullback. It was 12, 15%. But what happened is that it was like the end of the world. And it was like pretty intense. Dave White, Tom O'Brien, you stay right there, folks. We're going to be coming right back and growling a problem with us. We do appreciate you being out there. And stay warm this weekend, folks. Dow is down, finished down 81. NASDAQ off 24. S&P's off 4.5. We're going to be right back.